Joining us. Thanks to all the people who are here virtually too. So we're going to start with a quick round of introductions and just a little recap of what we've been doing for the last couple of days and try to get the new people oriented to what this is all about. And then we'll jump in and talk about savings pools. And we have a guest from New Zealand online who will tell us how they use saving pools in New Zealand. So if you could introduce yourself and just say whatever you want to about yourself briefly and what brings you here. And if you've been participating the last couple of days, maybe, something that sticks out for you. And actually, everyone online, if you could mute yourselves when you're not speaking, that'd be great because there's background noise that comes up. And that way you'll be able to jump in and speak when you are ready. So I'm Stephanie Rierick. I'm here from Madison, Wisconsin, United States. And what's been sticking out for me the last couple of days is we have a really great, brilliant, energetic group of people here who have really concrete ideas of what could happen here in Hull. And I feel like it's starting to come together, like how we can, the steps that could be taken to create some of these, realize some of these visions that people are having. So that's cool. So we'll go next.
My name is Bryony. I'm here on behalf of the Growers Network in Hull, which is all about getting community growing projects to network with each other, to share resources. So I'm quite interested in all the practical side of that and how we're going to get that happening here.
Great, thanks. If everyone could speak up as loudly and clearly as you're able, that'll help our online people hear you better.
Hi, I'm Rachel and I work for Time Bank and I'm a youth and community worker, and I'm interested in all the things that we've learned over the last few days and meeting people who are doing community projects in different areas, because it's things that we can learn, provide the tools so we can learn from each other. And, yeah.
Great. Thank you.
Yeah, hi, I'm Kate from Time Bank, and also the person that brought Stephanie here, and I guess what I'm really interested in is, rather than us all doing little projects, all trying to change things separately, it's like, how can this help us join together? Because I really strongly believe we have what we need already, and we've got the people there. So how these tools can actually help us live in a different way, do the things we want to do. And I found the last couple of days really inspiring. It was lovely doing some visioning yesterday about the society we want, and I think there's some seeds there connecting to people in Hull as well. So it feels like we're really moving towards a place where we're becoming a we.
Hi, I'm Steve. I've just got here, and I'm a writer and a journalist. But I've written some articles about Hull Coin, and I've also got an interest in the general subject of alternative economics, if you like. I'm suddenly I've got a bit of an interest myself in trying to do something about the whole cycle network, the provision for cyclists in the city. So I'm wondering if that's something that could benefit from this approach.
Great.
Good morning, I'm Mike. I work for Time Bank All East Riding. Past few days have been brilliant. I feel really inspired. It's great to see people with so many ideas. And I believe that we've got what it takes to circumnavigate the current economic system if need be, and do things our own way.
Lovely. Yeah. Hello, welcome.
Hi, my name is Val. I'm in here as an individual at the moment. I have been involved in voluntary community work in the past. I think my reason for coming here today to find out about Time Bank, but how that sort of fits in with my ideas about creating a fair and more just society.
Lovely, thanks.
Hi, I'm Salo. I only really sort of came along yesterday afternoon, so the whole idea is pretty new to me. Although the concept is something I'm familiar with, just from general reading around sort of thing. So I'm just interested to see how it all pans out and what other ideas come to the table.
Great, thank you. And now to the people who are joining us virtually. Scott, you want to go first? You there, Scott? And then while we're waiting for Scott, Georgina, if you want to introduce yourself.
Hey, I'm Georgina. I'm in Brighton. I'm a solicitor. I have my own practice called Thrive, which specialises in helping social enterprises and community ventures. And I'm just interested in exploring alternate ways of funding for and with clients, and working with just local councils in sort of various ventures with the community. So yeah, pleased to be here.
Great.
Yeah.
Thanks for joining. Naomi, hello.
Hi, I'm Naomi. I live in Aarhus, Denmark, and but I'm from the United States, and I caught the time bank bug, you might say, when I lived in Madison, Wisconsin, and was a part of the time bank in Madison. And right now I have a project working with food and food sharing. We're making an app to make it easier for people to share the extra food that they have at home, and then pick that up. And working with the German food sharing group as well.
Wow, that's very exciting. Thanks. Scott, are you here?
Yep, just got on via telephone. My computer mic is not working.
Okay.
Hello, I'm Scott Murtaugh from Lansing, Michigan, USA. In the process of forming our Mid-Michigan Mutual Aid Network, utilizing our Mid-Michigan Time Bank, Lansing Makers Network, local community-supported agriculture, and other varied initiatives that are underway or in the process of forming. And I haven't had my coffee yet.
Oh, and it's really early there. Thank you so much.
It's very early.
At what time is it? Like 6:30, 7?
It's 5 a.m. I love this time of day. This is my favorite time of day.
All
the
right,
world
great.
belongs to me.
I'm very impressed you came on at this time. Phil, are you here?
Yeah, I am. Can you hear me?
Yes.
Hey. Yeah, so I'm Phil. I'm coming in from Ashurst, New Zealand, and it's still winter here. We thought it was spring until about 4 hours ago. I'm expecting to see snow on the mountains tomorrow morning.
Wow. And what time?
Yeah, no, looking forward to this and talking about savings pools and hopefully filling in some blank spots for everybody.
Great, and we'll like to hear more of an introduction from you when we come back to that piece. So I'm going to just give a little overview of what we're doing here and what we've done the last couple of days. Just try to be brief, but get people caught up somewhat. And then after that, we'll jump into savings pools. So for those, is there anyone online who we haven't heard from yet? Okay. Actually, I do want to show this. No, first I'll give the overview, and then I want to remember to show the video of Linda real quick before we start. So mutual aid networks were born out of the Dane County Time Bank. Are all of you familiar with time banking? Are you new to it? Anyone new to it? Okay. So it was born out of the Dane County Time Bank, which is a time bank I started in 2005, and it's a pretty robust time bank It's pretty robust. We have about 3,000 members, but only about a couple hundred are active at any given time. But we use time banking to sort of build our resource base to do projects. So the one that I tend to be most proud of is our restorative justice youth courts, which are keeping kids from getting arrest records and keeping kids out of the school to prison pipeline, which is a thing. It's a regular phrase that people use, and it's a real thing in the United States. And we've really made a dent in that, and partly because we decided not to ask for permission. We decided to build something that really recognizes that neighborhoods and communities are the ones who have the capacity to really help kids succeed and stay out of trouble. And having the time bank as sort of the base of the youth court gives us a chance to help rebuild all the social connections and educational, economic, and recreational opportunities that are the kinds of things that actually keep kids on a good path. So we've seen a big reduction in the number of fines and tickets into the juvenile justice system that the police or that are actually being issued. And at the same time, we've seen some really positive impacts on young people's behavior because they're feeling more accountable to each other, and getting more of an opportunity to do some more constructive things with their time. And partly because, well, actually mainly because of our success with that, our local judge has asked us to participate in a pilot where we're doing a restorative justice program with people who are homeless. People who are homeless are getting a lot of tickets, fines that the police are writing because they're out drinking in public or urinating in public or doing things that are a result of being homeless. So, and then we also have projects for inclusion of people with disabilities and wellness projects and transportation project, and we've done an energy project, and we're part of Allied Community Co-op, which is the first local mutual aid network, which is about bringing food into a neighborhood that has zero food supply, zero grocery store. We decided to focus on food when the pharmacy where people were buying their food closed in 2015. So the reason we wanted to go beyond time banking is it's great for particular things. The way I see it is it's really good for valuing, making visible, and rewarding the kinds of work that are infinitely abundant, like care, creativity, civic engagement, and community building. And the things that are very abundant aren't valued in the economy that we're laboring under now, in the dominant economy where things get value because they're scarce. But then it can't do everything and shouldn't do everything. Our analysis is that we need different tools for different kinds of economic and community functions. And also that it would make more sense for time banking, instead of time banking to be a thing where you make a time bank and you have to focus on the act of time banking itself, to turn time banking more into a function, weave it more into the fabric of people's lives, and connect it with some other ways that we can start approaching our work lives in a way where we can also value all the kinds of work that we contribute. So not just what we're doing as a job that earns money, but the work that we do to take care of our kids or our parents or our sick friends or people in our neighborhoods with disabilities, the work we do to beautify our communities, grow food, create music and arts. So all of these things, we realize that time banking can be a piece alongside other things, and we could really create a system that can help us redesign how we're living and live sort of more cooperatively, more interdependently, but also have more autonomy to do the things that we really want to do. So we have created a structure. So mutual aid networks, we say redesigning work for a cooperative, regenerative economy. And then we've created some, what we thought would be the most appropriate way to organize ourselves is to be a cooperative. And so we are a type of cooperative. Legally, it's just a regular cooperative, but mutual aid networks have more core principles. So we have cooperative principles of cooperation among co-ops, for example, and every member has economic participation and democratic control of the co-op, one member, one vote. But we also apply time banking principles, redefining work and recognizing that all work is valuable, for example, and that everyone has something to give. And then we also connect principles of governing the commons. So a big part of what we aim to do is rebuild the commons, which essentially means sharing, more shared resources. And I'll show you a little bit about our framework with that in a moment. But we created the Wisconsin Mutual Aid Network Cooperative, which is it's based in Wisconsin, but open for global membership. And the people we expect to be members, especially early on, are people who are piloting these kinds of projects, but also people around the world who just want these things to happen. There are a lot of people who are really thinking and writing and designing software and designing systems who have brilliant ideas to share. And what we really want to do is connect people's ideas with communities on the ground who might wish to adopt them. And then we all share everything that we're doing, share how it's going. If something doesn't work, share that with everyone else so we can learn from it and adapt and learn quickly and move quickly to really implement these visions before things crumble further. But our mission is to create means for everyone to discover and succeed in work they want to do with the support of their community. And by work, we don't just mean the work that you would do to get paid for. I just want to stress that. So we have this global co-op, and it connects pilot projects on the ground. The questions that we're looking to answer are, how do we build an economy that creates and rewards abundance? And then pay attention in service to what? We're not just looking to grease the wheels of economic exchange. We're looking to create the world we want, which in my opinion would involve a lot less economic exchange and a lot more sharing and living. And we're going to flip through this. But the methodologies that we came to are, we would connect sharing and time banking, price-based mutual credit, so it works like time banking, but can be used by businesses, and we pay taxes on it, recognizes the difference in value between things that are more scarce. So I could buy a refrigerator from your business for $1,000 worth of mutual credit. We would pay the taxes on that in cash, but I would owe $1,000 worth of goods and services to the members of the network, and you could obtain $1,000 worth of goods and services from the members of the network. And then community saving, lending, and investment pools, that's what we're going to focus on today. So this is, actually, I'm not going to even say anything about it because Phil's going to tell us all about how it really works in real life, which is very exciting. And for us at our Madison, Wisconsin pilot sites, that's our next step, is to really build our savings pools. That's the thing we have the least experience with. It's the thing we need the most. One of the limitations we run up against in our time bank is there are monetary costs to running the time bank and to doing the kind of community organizing, and people need to be paid because they need to keep a roof over their head and obtain food in the current paradigm. But also we always have printing costs and internet and things like that. So we have hard costs, and we want to become less dependent on getting grants and charity and really build a system that can just flow, that we don't have to be constantly struggling for the kind of money that is really scarce and difficult to obtain. And then we connect it with social processes to help people really learn how to do these things. And really recognizing that the economy is a social construct. We change it by doing things differently, which means that, in my view, changing the economy is more of a community organizing effort than anything else. So, and then I'm going to leave off with this. We've just kind of developed this framework, this upside down pyramid, just always going toward abundance. So when we're making, when we are deciding how we're going to get the resources for anything we need for ourselves or for our projects, we start with plan A for abundance. Is it shared or can it be shared? Can we build a shared resource for this thing that we need? If not, can we bank our time or stuff through time banking or just direct barter or swapping? If not, can we use price-based mutual credit in a business or with a professional? If not, if we really need money, can we tap into a savings pool? Can we be coming together and make a savings pool for our health expenses, especially in the United States, or for funding projects, or for supporting people when they have emergencies with no interest loans or grants? And there are a lot of ways that these are applied. And then plan F, if all else fails, get a job. An effing job. So, and I do like to, a lot of this is about how we can create means to voluntarily, joyfully redistribute wealth. So if people have a good paying, rewarding job that they would like to stick with, that they get a chance to work fewer hours at that job by doing more variety of things in a mutual aid network context, then it frees up some more hours of a good paying, rewarding job for someone else to have. And then on the same token, if someone's in a mutual aid network and they have a good paying, rewarding job that they're spending a lot of their time on, they don't have time to earn hours. In this framework, we can create ways that people can put some of their money into the savings pool based on how much they earn per hour, and put that in as a gift to the rest of the community, and then use time bank hours from the community to meet certain needs. So there's some really creative ways that mutual aid networks enable us to really foster some better distribution of wealth, which I think we all know we need. And our strategy is to have local pilot sites with different goals and different strengths and different limitations, so we get a variety of experience and a robust set of learning as quickly as possible. We're starting with 8. Here's Hull. We have one in Bareneck, South Africa. We have these 6 in the United States. Scott's over here. And then we have probably 12 more communities really seriously looking at becoming pilot sites. And then the goal, we already do this. We connect across these locations and eventually really aim to create a network of networks that could include every person on the planet, that could include every person on the planet who wants to be included. So that is that. And I'm just going to show you this really quick video from Linda after day 1, which I just was really inspired by. And then we'll let Phil take it away. I love it. Okay, so Phil, would you like to take it away now?
You bet.
You
So,
wanna share your
hi everyone.
Hello, morning.
Hi.
I guess what I'll start off with is just a little overview of who I am and this group that I'm involved with here in New Zealand called Living Economies.
Do you want to share your screen, Phil, or do you want me?
Yeah, I'm adding the little dealy whack here, and
okay,
hopefully it'll work.
Okay, and let me know if it doesn't.
So, yep, it says it's been added. Cool. All right. So we'll go entire screen. Yippity skip. And probably seeing something that's totally uninformative. All right, so this is the preamble, though we're not really into the savings pools yet. So, yeah, Living Economies got started, I believe, 13, 14 years ago by a group of people here in New Zealand who had attended a series of presentations by Dr. Margaret Kennedy, who came here on a speaking tour in, I think, 2002. And she presented on the problem of interest, the problem of finance, and why the money we use is sick, and it doesn't give us a very good means of providing for healthy communities and healthy societies and even healthy countries when you get right down to it. So she laid out her case, and a lot of people sort of had one of those aha moments, and they said, ah, yeah, right. And out of this, a group of people got together and they decided to form a trust, which they then applied for charitable status and got it. So hence the Living Economies Educational Trust was formed with a mission of providing tools and means for people in communities to get on a more solid financial footing with what you call non-traditional or non-mainstream tools. So the main things that the Trust has been involved in promoting have included time banks, local currencies, savings pools, local food networks, And we're starting to advocate a bit more for actual public policy. And this is a touchy area because in New Zealand, the charities law used to be very specifically interpreted to say that charities could not advocate for anything that might touch a political wire. But Greenpeace actually challenged that a few years ago, and they won the majority opinion of the court case and said that they were allowed to advocate for public policy as long as they didn't cross the line into actual partisan electioneering or political activity. So we're still pretty careful about it, but we do, in a very general sense, try to offer some ideas and solutions and point people in the direction of, shall we say, alternative thought that's maybe a little bit contrary to the mainstream view that's so dominant in the political realm. Anyway, long story short, that's what Living Economies is and does. I joined in 2010, was invited to go on a retreat and board meeting and met the people and thought I liked what was going on, so I joined it. And within a couple of years, I was the chair of the board of trustees, which is a position I've had for the last 4 or 5 years now. And it's been really rewarding. We go out and do a lot of public engagement. We work with a lot of different community groups around the country. The network keeps on growing. We're attracting a lot of other organizations from 350.org, Rise Up, Action Station, even the Salvation Army. I'll be meeting with their social policy person in a couple of weeks in Wellington. So all kinds of neat stuff going on down here. And one of our exciting things, of course, has been the uptake of savings pools around the country. So I'll launch into a bit of a discussion of what savings pools are and how they work. And the basic thing you need to know about savings pools, first of all, does everybody see my screen okay?
Yes. Sorry, I had us on mute.
Cool. No, that's fine. So the basic history is there's nothing new under the sun in this area. Savings pools in some shape or form have been around for thousands of years. If you think back to just normal processes of family lending or lending it within confined social groups, often people within a religious context or within some sort of community of practice will make loans to one another interest-free. And of course this was reinforced in early days by a lot of prohibitions and prescriptions against the charging of interest, at least within the dominant religions. They said you could not charge interest to members of your own faith. So this is a very important thing, and it was a recognition quite early on that interest was dangerous, and if allowed to grow unchecked, it could just bring about widespread ruin, and not just ruins of individuals and families, but whole towns, cities, and even whole nations could be brought down by debt. So it was, this was recognized thousands of years ago, and we're relearning these lessons again today as the whole world drowns in debt. So that's nothing new. And then in the past couple of centuries, we've seen things like mutual societies, building societies, and the early iterations of credit unions form where people would get together, save their money in one of these institutions, and then make it available to the other members of the institution, often at a very competitive interest rate compared to what the commercial banks were charging. Then about 50 years ago, a bank in Sweden started up called the Jak Bank, and the JAK is see if I can remember these Swedish words, Jord, Arbete and Kapital. So it's land, work, capital. And the bank was set up as a building society but they wanted to do it completely without interest. And what was new for them was one of their directors came up with an accounting method that enabled interest-free lending and kept everything working. So some previous iterations of this institution had been tried and failed. One started up in Denmark in the 1930s, and it basically went on the rocks because they went insolvent, and it was basically because their funds, available funds, were not being replenished as quickly as the demand for people to borrow. So what the Jack Bank of Sweden did was come up with this accounting method which allowed them to keep solvent and keep lending and keep the whole thing working without falling over. And it's worked very well for 50 years now. And they've just recently hit a rough patch, but it's something completely out of their control. And it's basically because Sweden has had negative interest rates for nearly 2 years. And things over there are so weird. I don't know if it's happening in Sweden, but in Denmark, mortgage holders are actually being sent checks from their banks. So this negative interest is pretty weird stuff. And it makes it very hard for the Jack Bank to market itself as an alternative, because people say, well, I can get a mortgage at, next to nothing in terms of interest. Why would I go to the Jack Bank with their rules and their reciprocity and things like that? Now, of course, the catch is in Sweden, home mortgage is typically 140 years.
Whoa.
Yeah, let that sink in for a minute.
Huh.
In other words, if you went to buy a house in Stockholm today, you'd basically be signing up your great-grandkids' children
Wow.
to the debt you're taking on.
That's crazy.
It's crazy. In fact, they tried in the past few months to lower the maximum term on a mortgage to 105 years. They failed. It's still 140-year mortgages are still the norm in Sweden. So that's how out of control things are in some countries. But because interest is negative right now, people say, oh, it's not a problem. Of course, it's like high property prices, which is another thing that you see in a lot of these economies. People say, oh, well, the market will keep climbing, the prices will keep going up, and I can keep banking on this paper wealth. But of course, the old adage is that gravity is a stronger force than markets, and what goes up will come down, and sooner or later people will find themselves underwater on a lot of these mortgages, and it won't be pretty. So that's a bit of the Jack Bank. And then around 10 years ago, one of the trustees of Living Economies traveled to Europe and spent some time in Sweden. Brian Ennis went and met with a few of the directors of the Jack Bank because he wanted to understand exactly how they were doing what they were doing and get his head around it and see if we could do a similar thing here. So he met with these folks, learned about their accounting system and the institutional framework. He came back to New Zealand and thought about it for a while and realized that the overhead of starting an actual institution was going to be pretty serious and maybe unattainable, especially when you counted up the compliance costs, the capital requirements, and all the other overhead. And he decided to come up with a model that was very grassroots and sort of a DIY. And this is very in keeping with the way we do things in New Zealand. It's what we call the number 8 wire mentality. If you can't fix it with a piece of number 8 wire, it probably wasn't worth having in the first place. We've got that very strong do-it-yourself, pull yourself up by the bootstraps mentality here. So what Brian did was he sat down and figured out a way that people could just get together, self-organize, and form these savings pools with simple agreements, very simple contracts, and do these things themselves without the institutional overhead of an actual bank or credit union or anything like that. And he refined it and started to put it into practice with a couple of test groups and he was pretty happy with the outcome. So he came to the rest of us and said, I think we ought to promote this as a solution. So the other board members got pretty excited, and we started talking about it, going out and telling other people about it. And then along the way, at one of our AGMs, we decided we'd actually form one ourselves as a community of practice. So a number of board members put their hand up and said, yeah, let's be in a savings pool together. And that savings pool is still going. It has around, I think we've got 17 or 18 members now around the country. And they just helped my wife and me buy a glass house that's going up out in the front section now, and if we have fine weather this weekend, I'll be putting the glass on it.
Mm-hmm.
So this is how savings pools got going. The secret, the Rosetta Stone that we got from the Yacht Bank was points accounting, and this allows a pool to function and keep things fair without charging interest. And points accounting is dead simple, and the beauty of it is it allows you to account for a whole lot of different scenarios and make sure that everybody gets the same value from the pooled money that they give. So a point equals $1 a month, and that just means that $1 that's in the pool for 1 month available for others to borrow accrues 1 point. And by the same token, if you've got $1 loaned from the pool for 1 month, you then have a debit of 1 point to your account. So you have to restore that to the pool. These balances are additive but not compounding. So as an example, if I put in $100 to the pool this month and another $100 next month, at the end of next month I will have 300 points because I earned 100 points this month, but next month I earned 200 points because I had $200 in the pool. So is that clear to everybody, how the points work?
Yep, a lot of nods here.
Yep, good. Yeah, it's dead simple, and of course you can't charge points on top of points. There's no compounding, and a point rather, is an accounting function. It's an accounting measure. It has no intrinsic value in and of itself outside of the pool. So within your pool, the points are how you keep track of everything, and the points can actually be gifted, and this is something we actually use from time to time, but you can't really trade with them. So you can't take your savings pool points and go down to the dairy and say, I'd like a loaf of bread and jug of milk and a chocolate bar, and the clerk's going to look at you and scratch his head and say, show me the money. So it works within a single pool, and it's just a shorthand and very simple way of measuring the flows into and out of the pool and keeping things completely fair and transparent. And it helps simplify a lot of the scenarios. So here's a real simple example of a loan. Somebody takes out money from the pool and they start paying it back. And you can see the orange bits show where they're basically in debt to the pool. They've got the loan outstanding. As they pay back into the pool, the green shows the reciprocity, or the additional amount going into the pool. Now what this means is, over the life of the repayment of their loan, they're paying the same amount that they borrowed over the same period of time again. Here's a larger example. This is a $1,000 loan that somebody has taken out, and they're repaying over 10 months. What they're doing is they're paying $200 back to the pool each month. And you see what happens as the loan is repaid. the orange bars decrease by $100 each month as the green bars grow by $100 each month. By the end of the 10 months, they've paid off their obligation to the pool. The orange has shrunk to zero, and they have put in an equal size contribution, the green bit, to the pool. And that's money that other people can borrow while it's in there. At the 11th month, they now have $1,000 sitting in the pool that they're free to take out if they want or leave in. But that just means that it has reached its maturity date and the reciprocity obligation has been satisfied. So they have used $1,000 of the pool's money for 10 months and made available to the pool $1,000 for 10 months. And that is the balance of reciprocity right there. So does that all make sense?
Any questions? I think we're good.
Yep, that's the simplest and most linear example of how a pool loan works and how reciprocity works. So it just basically means that I borrow $1,000. Over the life of my loan, I pay the pool $2,000, but at the end of everything, I have $1,000 in the pool that I can take out. So instead of having paid interest, I've paid reciprocity into the pool, but at the end of the term, I can uplift that reciprocity contribution. It's mine, which if you ever try doing that with interest, you usually need some sort of weapon and other things like a getaway car. So that's the large loan example. Here's another common thing people do, and that's putting in money to the pool beforehand. So you just say, I'm going to chuck some money into the pool each month, and then somewhere down the line, I need to buy a new fridge because our one is knackered. So I put some money into the pool each month now, and then a few months down the track, I say, right, I've got to get that fridge. So what this means is, in this very simple example here, somebody's been putting in $25 a month for 3 months, and then in the 4th month, they take out a $75 loan from the pool. They don't need to make any reciprocity contribution to the pool because they've already pre-saved that amount. Does that all make sense? So just a very simple example. Now, here's a bigger one, and this is more on the order of maybe buying a house. This would be somebody who's put in a pretty sizable nest egg from the get-go, and then maybe saving a little bit month by month on top of that. And then once they've built up a fairly good-sized chunk of money, borrow the rest from the pool. So in this example, they've saved around, it looks like around $175,000, and then they go to the pool and borrow an additional $125,000. So they get actually a sum of $300,000 from the pool, buy the property, and then they can spend quite a bit longer. You see how this orange curve has quite a much longer slope to it. So they can spend quite a bit longer paying it back, but then when they're done, everything's even. And what we're actually looking at here is the area of the green, the area of the orange are equal. And so you can visualize the points in that green area has been sort of preloaded into the agreement. When they take the money out and go buy the property, they can then spend longer and make smaller payments paying it back, and they can they satisfy the reciprocity by doing that because of all the money they had saved earlier. So this is a really quite a compelling reason for people to put money into a pool even though they've got no current needs for lending, and it's also an intergenerational asset. So we've got a number of people around the country who are in pools who may be pensioners, they don't need any big purchases anytime in the near future, but they've got a pretty sizable nest egg. They can then invite their grown children into the pool with them and gift a sizable chunk of money and or points to their kids and say, here you go, here's the down payment on your house. So does that all make sense?
Yep.
It's really
Hey,
pretty intuitive once you get your head around it.
Ask, how does that fit in with things like inheritance tax, for example? Like, I'm just,
well,
if one of the older ones dies, how do they fill in their probate forms?
In New Zealand, it's pretty cut and dried because the financial asset is just the bank balance. So if you're in a pool and you want to nominate somebody in your will to get your balance, you just set that up. If you want them to get your points balance, they need to join the pool because the points are meaningless unless they're a member of the same pool. But as far as the dollar balance itself, the monetary balance, that is handled just like any other asset in the estate.
Thank you.
Mm-hmm.
Yeah.
And then another example here with repayments is if somebody, say, gets unsteady income, somebody might be a contract worker or a seasonal worker or somebody who just gets money on an infrequent basis, a pool can work out an agreement with that borrower saying, you just give us a lump sum each 3 months and this is what it would look like. So they pay every third month, they pay a certain amount, and by the end of the term, the red or the orange and the green equal, they balance out, and you have reciprocity. So there are lots of other scenarios, but these are some of the most simple ones, and probably the easiest way to sort of introduce people to how points accounting works and how it looks over the life of a simple agreement within a pool. So yeah, so that's me with the presentation. What I'll do now is talk a bit about the mechanics of the pool itself. So what people will do is get together to form a pool. Sometimes it's because they heard somebody like me give a presentation. Sometimes it's because they've read about it on a website, any number of reasons. The things that they do are very straightforward. They get together with the people that are interested in forming the pool, have a meeting. Everybody signs an agreement with everyone else. The agreements are very simple. They just say that I agree to abide by the terms and conditions of my pool, that I will keep everybody's confidential details confidential, that we will make our decisions in a mutually agreed upon fashion, and if we have a difference of opinion or any sort of dispute, that we will have some sort of mechanism for resolving that. Most pools use a consensus decision-making framework, and a lot of the ones that I'm aware of here in New Zealand are actually using Lumio as an online tool that facilitates these discussions and decisions. This is especially helpful for the pools that are not geographically located in a single place. So we have a few pools that are scattered all over the country, and people meet online, and without this tool it would be a lot harder to get things done. So that's one thing I tell people is if you're going to if you're going to meet virtually or meet online, it's a great tool to have because it means you don't have to keep chasing each other up for copies of an email or things like that. It just simplifies things, and it gives you a good record if you have to go back and refer to it. So the consensus-making decision process is important because that way everybody is included in the decisions of how their money is being used, and also, very importantly, what sort of security the pool has in the event that a borrower goes into default. So the foundation of a pool is trust, and everybody needs to trust one another. And if you're loaning a sizable sum of money to somebody and there's any chance that things might turn pear-shaped, it's always good to know that you've got something to recover so that all the lenders can be made whole. The obvious things to do are to register a security interest over an actual asset. So that can be things like a car, it could be a chattel, or it could actually be real property in the form of a mortgage. So we do all of these things here where pools can have what's called a personal property securities register. This is actually a service provided by the government where for $20 you can go to a website and effectively register a lien over somebody else's personal property with their consent, of course. And that can be used on things like vehicles, it can be used on furnishings, whiteware, chattels, fixed and movable assets. And then for the really big loans, the property loans, we actually do have pools record mortgages. And they do this by nominating one or more agents who will act on behalf of the pool. Once again, this is specified with a written agreement so that these agents then become the mortgage holders or the mortgagors of the property, but they won't dispose of it or do anything unless instructed to by the pool. And that's how security interests are obtained.
Phil, are you going to want to show anything else on your screen, or should I just switch to my screen where I just have your website?
You can go ahead and switch to your screen. I don't think I've got anything else interesting to show.
Okay, so go ahead and continue.
Yeah, so it's just talking, and this is where it kind of goes off to Q&A. So if there's something I haven't covered or something particular that people want to know, this is where you get to ask it.
Hi, I'm just wondering as well, sorry, I'm just wondering if for things like people being in default, and bearing in mind I've worked in courts and I've watched people going bankrupt and crying in the courts, whether there's still, because I'm looking at what you're doing and it doesn't sound any different, to be honest, to what normal profit-making creditors do. If you can still take away somebody's possessions, is there not ways that you were willing or you explore as a cooperative what's caused somebody to go into default and to rally around them, to support them, meet their obligations if that's possible? Have any of the groups that have these saving pools done things like this to support people that may be ill, or a parent may be sick, or they've had a relationship breakdown or a job loss or something, rather than just saying, well, you've signed this? I can't see why, if somebody needs the money, I can't see why they wouldn't sign it or agree to it any more than a payday loan or a bank. If they're that desperate, of course they'll agree to let you take a charge over their white goods. Or their,
absolutely.
You know,
well,
so I'm just wondering how you support people more.
Well, okay, in the first place, to my knowledge, although we have had, now of course I don't know all the particulars of all the savings pools in New Zealand, but I'm involved with a lot of them, either as a direct member, or in some cases I've been in the position of a signatory or a record keeper for other pools. I'm not aware of of any adverse possession being taken of any pledged asset or any securitized asset in a pool agreement. In other words, this is just a standard thing that pool members do with one another to say, if you're at all uneasy about committing your funds, so I mean, if you're saying to somebody to put their nest egg into a pool and then loan it to somebody else, that if things do go pear-shaped and all other options are exhausted, then that's the key thing. If all other options are exhausted, that there will be no way that the lenders could be made whole again. It would put a lot of people off putting their money into a pool, especially if it does represent their bulk of their savings. Now, of course, the idea of exhausting options is a real important one, because when you've got a savings pool, these people have a bond. It's a kinship bond, and it's a bond of trust and a bond of collaboration. And what people do is go to sometimes pretty extraordinary lengths to help one another out when problems arise. And this takes a lot of forms. People can gift one another points. So somebody who has a sizable balance in the pool and has no plans to borrow might have a really hefty savings point balance that they're never going to use. And they can quite easily go to somebody else in the pool and say, I see that you're struggling. Would you like me to gift you some points? Which basically relieves them of a piece of their reciprocity obligation. That's one thing can do. Members can actually make cash gifts to one another if they want to. They can work out other ways. They can work out payment holidays. They can work out arrangements. There may be a situation where somebody has bought a property with the pool's money, and they fall into a bit of strife, and they're not able to meet their payment plan, but they're on the property, and what they may be able to do is provide a place for another member's kids to park their tiny home or their caravan free of charge or at a reduced rent, or there are all sorts of creative ways that pools can find to help one another out and actually derive a shared benefit if somebody gets into a bit of trouble on their payments. So don't get the idea that pools are going into this business of having security over somebody's assets as a kinder and gentler loan sharking, because it is really only meant to be there as a backstop if all other options are exhausted.
And the other differences are not interest, not compound interest, and
well, that's the obvious one.
Yeah, credit union. Even my credit union won't allow flexible repayment where you pay once every 3 months or things like that. I'm curious. I would like to hear some examples of how people have been using savings pools in New Zealand, and this is a new group from last time, so maybe a little bit about how some of the savings pools connected. But I would like to hear examples of what people have done, if that's
Yeah. So my personal example is we're putting up quite a flash glass house. It's about a 20 square meter glass house. Nice engineered aluminum one. Should hold up even to the winds we get here and extend our growing season. And the idea is to grow some specialty herbs and seedlings and things like that we can sell at our village market, as well as maybe get a slightly better harvest of aubergines and tomatoes and chilies and things like that. And if the kids are real lucky, I might even grow a watermelon or two. But that was made possible by Sharon and I both work as contractors and do a lot of work for the nonprofit sector, and sometimes the money comes in chunks, and sometimes it's a bit like the pig and the python. You've got quite a bit of money sitting, and we'd hate to see it sitting in the bank. So if we've ever got a little bit extra, we would just chuck it in the pool, and honestly, a couple times I think we would forget about it. And then about, I don't know, 6 months ago, we were thinking, oh, it'd be nice to get the glass house up this winter and have it ready for the spring planting season. So I thought, oh, you know what? I think we have a fair bit of money sitting in the pool. Let's go take a look. So I checked it and said, yeah, you know, we could do this and have the pool by the glass house. And the way the agreement reads is the pool owns the glass house until we've got the payments done. So for the next 3 months or 4 months or whatever, because most of the money was money we had already saved in the pool, and because the money had been in the pool for quite some time, the reciprocity has already been met. So we only have to pay back a little bit, but the agreement reads that the pool owns our glass house until we've paid it off. So that's one example. Another example is a person came to a pool after having to move from Christchurch. They were in Christchurch when the earthquake hit, and their house was basically made unlivable. The insurers were slow to pay, and when they finally did pay, it wasn't enough to rebuild or recover. So they actually decided to just pick up they've been traumatized anyway. They didn't want to deal with it anymore. They just said, okay, pack up everything, move to the North Island. In doing so, they had to put all their household goods into a storage locker. And then they moved up to the North Island without any of their household goods. So no furniture, no utensils, appliances, none of that stuff, no rugs, and set themselves up in a house on the North Island. But in order to get that stuff across the strait, they have to pay a trucking company a few $1,000s to get the goods out of the container, get the container goods, put them on a truck, put them on the ferry, and then put them on another truck and get them up to where they're living now. And they're on an invalid's benefit, don't have any real income other than that, can't get a job because of their health condition, but would really, they've got this house now, it's a nice place, but they've got nothing to put in it. And all their stuff's down in Christchurch. So they came to the pool and said, how can we make this work? Because they couldn't get a bank loan. The only thing they could do was go to the loan sharks, the instant cash places that charge on the order of 25 to 30%. Yeah, so came to us and I said, oh, no way, don't do that. Please don't do that. So we got a loan set up through the savings pool and set up the payment so that it works on their beneficiary's income, and contacted the shipping company and said, can you uplift this container, bring it to the North Island, and got that in the way, and they've got all their stuff now, the money's coming into the pool, and everybody's happy.
Cool. Have you used savings pools to seed fund projects? Are there situations? Yeah. Sorry. Go ahead.
Yeah, we've got a couple of businesses now that have used pooled funds to do things. In a way, the glass house that my wife and I are building is meant to augment a little business we're building with herbs and seedlings and things like that. We've had other businesses go to the pools to get bridge funding. There was a business that was importing some goods, and it made a huge difference if they could get an entire container worth of these things at one time rather than importing them in ones and twos and threes. But of course, to get the money, the cash to get a whole container load was out of their reach. And a bank didn't even want to hear about it. So they were able to go to their savings pool and say, would the pool buy a container load of this product that we know we can sell, and it's only going to take us 3 to 6 months to sell all these, and at the very outside, 1 year. And in the meantime, the pool owns the goods and can reclaim them if they want. So the pool thought, oh yeah, this is a perfectly acceptable proposition. It covers the risk, and they didn't have any problem with it. So yeah, the business was able to get a sizable chunk of capital to work with, and then they were able to make a purchase that made their business a lot more viable, because getting a container load of these things instead of just a couple at a time was a huge discount, huge savings.
Do any of you have questions? I have a couple other questions, but I don't need to dominate the question asking. Does anyone have questions either online or here?
Well, in that particular example, you talk about a decision being made, and people coming to almost apply to you for loans from the saving pool. So what's the decision making process then when deciding whether to invest in someone, if you like, it would be the banking partners. But how does that work in the saving pool?
Right. So a member comes to the pool and says, I'd like to borrow X, and I propose to repay it at such and such an amount over this many months, and here is what I would offer in security. And then the other pool members will think about that and talk about that. So they may all do this in a meeting, all sitting down. A lot of pools get together once a month for a shared meal, or at least for a cuppa, and spend an hour or two just going around with whatever new agreements are being proposed, maybe introducing new members, just having a general catch-up. So if it's at an actual sit-down meeting, then people will actually just discuss it out in the open. And then if somebody's got a question or a concern, then it's up to the applicant to address that. So that's where a lot of the security questions arise, because sometimes somebody else in the pool may say, well, I'm not quite so sure about this. Somebody may not be comfortable with it for one reason or another. So it's the job of the others to come up with a way to make everybody happy with the agreement so that it can go forward. Now, if a member doesn't want their funds put at risk with a particular proposal, but doesn't want to block it from going ahead, they have the option, or at least in a lot of pools, and of course this is one of the things that pools decide, is how you treat this. But there's the notion of ring fencing, or holding back funds. And that just means that I may look at your proposal and say, well, I'm not quite sold on the risk involved here, and I'm not sure I want my funds to be tied up in it, because I could see an actual material loss, and I can't afford that. But I don't want to stop it from going ahead if the others are willing to take it on. So what I can say is, I'm willing for this to go ahead, I'm just not willing to bear any of the risk. So a lot of decisions can be made on that basis, where one or two people may not be able to wear the risk, but they don't want to block the agreement from going forward. Another thing that can happen is you might have one or two people in your pool whose contributions are quite modest. They may be fixed income, they might be young, just starting out, don't make a whole lot of money. So the amount of funds they've actually got in your pool is quite small. Somebody else in the pool may apply for a loan that's quite large, and in the event of that loan going pear-shaped, if all the members of the pool were to equally shoulder the risk of that, it could mean that people with small balances in the pool are wiped out. In fact, if you wanted to think about the worst case scenario, some of the smaller balance holders would technically owe money to some of the other people in the pool, and you really don't want that. You don't want to put people in that position. So it's quite common for people with small balances in the pool to agree to other proposals saying they're happy for it to go ahead, but they will only bear a risk up to a certain amount. And then it's just up to the other members of the pool to say, that's okay, we'll backstop any remaining risk. And of course, all of this is only theoretical and would only come about if somebody defaulted on their loan very early in its term. And that's pretty rare.
Hi, I've got a question. Given that the members make decisions on who borrows what and for what purpose, does that mean there's an optimum size in terms of numbers of members? Because obviously, if you have like too many, it would complicate the issue.
I'm sorry, I didn't really catch a word of that. Can you speak closer to the microphone?
Yeah. I'll stand up. I'll come closer to the mic. Yeah, what I'd like to know is, given that you use the members, the members make the decisions on who borrows what and for what purposes. Is there an optimum size of membership? Because I would imagine that if there are too many members, it would become very complicated, that process.
Yeah, you're absolutely right. There seems to be a sort of a sweet spot between 10 and 20 members. The stronger pools tend to be in that range. I do know of some pools that have only a handful, maybe 6 or 8 members, and do quite well. I knew of a couple of pools that only had 3 or 4 members and really struggled. And I have heard anecdotally of a pool that grew over 20 and split just because they couldn't all meet in one room anymore.
Could you share a little bit about what you shared at the last one about the Maori, I don't know how to pronounce it, about how this applied or was beginning to apply in those communities, indigenous or Aboriginal?
Yeah, so the one of the problems that Maori have in a lot of their communities in New Zealand is that their customary land, the land owned by iwi, is basically communally owned. So there are no titles. And when commercial banks make mortgages, they're actually registering the mortgage on the land. The house is incidental. It's just, it's some timber and wires and things like that. They don't really care so much about the house. It's the land. So it has been very difficult for Maori to get mortgages to build homes on iwi land. And that was actually the first use case of a savings pool in New Zealand. Was a family, or actually it was a couple of families, wanted to be able to build on this land that was held in common, but they couldn't get regular mortgages. So they formed a savings pool, and a number of homes were built, and it was all done interest-free.
Other questions?
It's scale and, scale, how, in terms of how much money you've got to put in, but I guess you could do it around particular areas of interest, like, for example, the Growers Network, thinking about how that could be a way to enable different sites to contribute money in that they can for their basic costs. Just thinking it would be small to it's big, doesn't it? That just sounds out of reach.
Yeah,
I've got
Scale is something that we had to deal with quite early on because a number of pools got going, and of course for everybody the holy grail was getting people debt-free, and for most people the big debt is their house. So getting enough money together in any single pool to actually pick off a mortgage was pretty daunting. And what we initially did was we formed a pool of pools, and we had about 10 or 12 pools join together and create a super pool. And that pool basically counted the pools as its members, and each pool would then nominate a representative to attend the meetings of the super pool. We called it the SPA pool, the Savings Pool Association. So the reps from each pool would meet, and then they would consider large requests from any of the constituent pools. So that way, if somebody from any one of the pools wanted more funding than their pool could provide, their pool would then go to this SPA pool and say, we're looking to raise a considerably larger sum. What can the other pools put together? And the agreements would be treated just like a regular pool agreement. And this worked very well for a time, and we actually did pick off mortgages and do some, considerably larger loans. What happened was our solicitor, who was helping us with some queries from our friendly government regulators, looked at this model and said, I don't like it. And we kept coming back to her with ways of, I guess we were sort of putting lipstick on a pig. And finally she said, nope, you can't do this because it runs you afoul of something in New Zealand securities law, which is the direct control of the funds by the contributors themselves. So the members of the pool have to have direct control over the disposition of their funds when they're under the pool's ownership, shall you say. Or actually, technically, they still belong to the people. They're never owned by the pool. They're still owned by the individuals. So we had to actually disband this pool of pools because the risk of it being called something that it wasn't was too great. What we wound up doing was instead forming a special pool specifically to facilitate the larger lending. And what happens now is if you're in a pool and your pool doesn't have enough money to fund a larger loan, you can then go and join this specialized pool, and its job is to shoulder tap other pools and say, have you got members with excess funds that aren't being used by your pool right now that they could take out for a period of time, put into this pool, and fund a larger request. So the net effect is the same. We're able to put together larger sums and do things like mortgages, but the funds remain under the direct control of the lenders, and there's no abstraction layer, if you will. There's no second hand or nothing ever gets beyond arm's length. So it keeps us within the confines of what the law allows.
Did you have a question, Rachel? Okay. So we have about 5 minutes left, unless people choose to go over since we started late. But I think we could wrap up in 5 minutes. Are people comfortable with that?
Yep.
I wanted to run an idea by you while you're with us because I felt like after the last time we did one of these sessions, all of a sudden it helped answer a question, I think, in a simple and elegant way. Because our goal is a little bit, um, maybe a little bit different, or anyhow, we do have this goal of being able to really build some wealth redistribution and really create avenues for people to be able to access money when they don't have any money to save, when their contributions can be valued in different ways. And we're interested in augmenting some pools, and maybe we don't call them savings pools ultimately. We have some that are as simple and elegant as the ones you're describing, but some where we're really feeding it with some philanthropy and various sources. And I was realizing that maybe we could just create a really simple situation where all the philanthropic dollars that we're bringing in correspond to points that are then made available under certain terms. So someone could be working, doing different kind of work, under terms that we agree to in the savings pool. Like you can work 4 points in the savings pool because we know the money's there. We brought it in the form of a grant or just a gift. So you know what I'm saying? So someone in the community who really doesn't have money to access and doesn't have a simple way to access money could do work, earn points in the savings pool, and be eligible to draw money from the savings pool.
Yep. You could certainly do that, and it would just mean that the agreements that you use to set up your pool spell that out pretty clearly from the get-go. And we have several pools around the country here that have one or more, you could call them angel investors, or people that have joined the pool and put a significant chunk of money in from the get-go and just said, I don't need this money, I don't need the points, I don't plan to borrow any money, you guys take it and just use it. And there are literally at my last reckoning, I think there were half a dozen mortgages that had been paid off out of some of these types of funds, where one or more people joined a pool, put a pretty good chunk of money in, and said, here you go, I'm unlikely to ever ask for this back, let's just leave it in the pool. So in your case, yeah, you just have the organization would put money into the pool, and then you could have some sort of mechanism that you'd probably want to make it quite transparent that says how points will be gifted or awarded and what the terms are. So yeah, if it means that somebody does some sort of community work or performs some sort of service or meets certain criteria, you've got something that's not arbitrary, something that's consistent and standardized and that you all agree on, that says this is what you can do, and then we will give you, this amount of points, and then you'd actually turn into a sort of a granting body yourself that way, only you would be encouraging people to pay money into the pool at such time that they were able to, so they would then be in the position of rewarding the next ones.
Lovely. Thank you. Yes.
I just wonder if you can get by without a tame lawyer.
Well, it's every situation, every legal jurisdiction is going to be a bit different. What happened in New Zealand was, of course, after the GFC, we had quite a spate of dodgy finance companies go belly up and cost the taxpayers a lot of money. And one of these in particular was put the government on the hook for over $1 billion. And by all appearances, and the fellow who ran this outfit was quite philanthropic dude, but things got too complicated, and it got to the point where it just looked like a Ponzi scheme. And he was actually getting new investors on board so that he could pay off old ones, and there was no end in sight to the shell companies and join the dots. But the thing is, at the root of it, this fellow had a heart of gold. He was really trying to help out a lot of struggling people in his region. It just got out of hand. Anyway, that's a digression. What came of all this, though, was a very strict, standardized regime on how some of this sort of lending could take place, and it was meant to cover not just the traditional finance companies and non-bank lenders, but they broadened it to include peer-to-peer lending and some of these newer forms of finance that we're seeing. So we got a please explain email a couple of years ago, and a couple of rounds of phone calls. They said you ought to lawyer up, so we did, and yes, we did. We managed to get an awesome solicitor right off the bat, very well versed in securities law, who took us through the process, bared her teeth at the regulators and made them go away, and then turned around and did a whole bunch of pro bono work for us to develop and draft agreements and templates and all sorts of things. So yeah, it was a huge benefit, a stroke of good fortune for us to encounter this person and be able to make use of her services.
So we should wrap up now. It's a little after 11:30, which is when we said we would end. We do have another session that's scheduled to start right now, but it will start in 15 minutes because we're humans. And that session is a communications workshop. We'll be talking about how we can get our ideas across, our visions, our projects in a succinct and compelling way and tailor it to different people. And in the meantime, I just really want to thank you hugely, Phil. I want to let everyone know Phil has shared with us the various agreements and documents and templates that they use. So we have those available to us. Some of the homework that we came up with at our last summit in Madison is we're going to tailor some of those agreements to meet our needs and just play with that and then use that to consider launching our own savings pools. And Phil, you've been so generous with your time and knowledge, and we just really appreciate it. So let's all give him a round of applause. So thanks.
Yep. Thanks, everyone. Yep, huge pleasure.
Thank you. Thank you.
All right, take care, and we will restart this web meeting in 15 minutes. Thanks.
Yeah, I'm Kate. I'm part of the Time Bank as well, and I guess the person that's brought this to Holland, engaging with everyone else about it now, which is really, really exciting.
Hi, I'm Steve. I'm a freelance writer and journalist, and interested in alternative economics and other things.
Hi, I'm Mike. I work for Time Bank, Holland East Riding. Great to be here. Great to hear what everyone's got to say, and finding it all very exciting at the moment.
Hi, I'm Sala. Again, sort of here just to see what the whole concept is all about, and see whether I can help out.
Great. Thank you. And then, and we have some other people here, but they will be back in shortly. And let's go to Scott.
Hi, everybody. I'm Scott Murto from Lansing, Michigan, USA. We're one of the manned pilot sites.
Great.
Looks like you guys are having a great time over there. Keep up the good work.
Thanks. Georgina?
Hey, I'm Georgina. I'm in Brighton. I'm a solicitor. I have my own practice called Thrive, specialising in social enterprise and community ventures. Pleased to be here.
Great. Helen, hello.
Good morning. Helen from Kansas, and I'm one of the pilot sites, the Kansas Woman Wellness Oriented Mutual Aid Network. Recently retired from 40 years of rural family-centered nursing, and I like to play with and I was cooking team with Kate last summer at the Manna.
Great.
Yeah.
Thank you. Leslie?
Hello, I'm Leslie. I'm not that far away. I'm in Hornsey, so it's just nice to be with you all.
Where are you? I'm sorry, could you speak up just a little? You're quite faint for us.
Hi.
Hello.
Just in the East Riding in Hornsey, so not that far away. So it's nice to be with you all.
Yeah, good to hear from you. Are you a member of the Time Bank?
No, I'm not a member of the Time Bank, but maybe I should be.
Oh yeah, because there's members out there.
I was with you the other day.
You were with us the other day?
Oh,
Yes.
Leslie, of course you were.
Great. Oh, okay.
Yes. Hi.
Oh, good.
Great.
Thanks. Thank you. Someone else is coming on, but maybe we'll miss them. So anyhow, I'm just going to kind of jump in, and this is a skill share. This is not me telling you how to communicate your ideas, but I will share sort of some frameworks that I have for it, but I want you all to share your own frameworks too. But just to start, why don't we just say, I think that you are one of the people who suggested this topic, but anyone who was interested in learning more about communicating these ideas, do you want to just share what some of your goals might be? Or like why?
Yeah, I did say that one of the things is trying to, everything that we're talking about, trying to put it into a context that can then be pushed out to the people so that they understand it.
Great.
A lot of it I don't fully understand myself, so yeah, so this process might even help with that.
Hopefully, yeah, we'll see. Anyone else want to share like something that you'd like to
I mean, looking at it as slightly as as an outsider, I think it's a big ask to ask someone to get a handle on the whole concept. And I actually think the key to communicating stuff like this is to break it down into understandable chunks. And that's, as a journalist or someone, if I was writing a press release or something, that's how I would approach it.
Great. And I think that was the biggest challenge I had in trying to engage people in the process of this actual summit. It helped better actually going and talking to people face to face, I think, to do that. But I just wanted to share what the daughter said about this, who's involved in time banking, when I was going, it's like, how to get it across. And she said, just bear in mind, Mum, time banking is hard enough for some people to get their head around. This is like time banking level 3000.
All right, so good. Does anybody, are you familiar with the term elevator pitch?
Yeah.
No.
Okay, so you just pretend you're showing up at an elevator, a stranger gets on the elevator at the same time, you're going up a few floors, and that's the amount of time you have to communicate something to them and maybe motivate them to do something. So we'll start with that, and then we'll move on from there. And the elevator pitch, you definitely have to break it into some understandable chunks that can be delivered quickly. And people who are online, just I can't see, I'm not looking at the chat or anything, so pipe up if and when you want to say something, and please feel free to contribute what works for you. I guess the first questions I usually ask people when we're thinking about creating an elevator pitch are what excites you about this concept of mutual aid networks?
Sharing information.
Sharing information.
Sharing ideas. learn about each other's pitfalls and seeing different solutions to different social problems and working together. That's what.
Okay.
That's like aside from all of the kind of like economic thing. It's kind of like, I get it, but it kind of like goes, it's on steroids, isn't it? It's
So what's the fundamental thing? Like, what's the key? Like, what's the point of a mutual aid network, or in your view, what your mutual aid network would be? What would be the point, the main driving force?
I think it's about empowering people,
Giving people, self-determination.
Self-determination.
Making your own opportunities, isn't it?
Yeah.
It's
Making your own opportunities. Okay.
an
So-
alternative society.
I mean, the term systemic change is what really excites me. It's something, it's really turning it all on its head, turning everything we know on its head, really.
How did you phrase what you just said, Peter, about the society?
Alternative society.
Building an alternative society.
I do that say things and I forget what.
So think about your personal top 2 or 3 or 1 of these, because you'll want to come back to it. And let's talk about what are the kinds of things you would need, what are the elements of an elevator pitch? What are the kinds of things you would want to be communicating to a person, just at a simple level? So what are the main elements here, would you say?
The what's and whys of it.
The what's and whys. So why is a really huge piece. And a lot of times people forget to talk about the why, but the why is really the only thing that counts. No one cares about the what or the how if you don't care about the why.
Yeah.
So great. The why and the what, you said? Okay. And what else? Why would you be talking to the person? Why are you compelled to let them know about this? What do you want to have happen with that?
One of the things with working with young people, I think it's you only see what's like in front of you.
Mm-hmm.
So by opening this up, it can make the world seem more like 5D, like.
Oh, 5D?
Yeah.
Broaden horizons.
We can see the world more through other people's eyes rather than we don't have to travel there, we don't have the means to travel there, but we can start to view the world differently. So you're creating empathy. Yeah, so broadening things up and that.
So it's only when people can empathise with other people's situations that any sort of will to make changes comes about. To don't empathise, you can't understand that person's situation.
We're all getting screwed up.
Yeah. I said the other night about the Aquarian Sutra, which is this year as well, and it's Sutra's the Aquarian age, this is my yoga, but it's understand with compassion or misunderstand the times, which sort of links to what you were saying. Yeah.
Can you think of any sort of tangible goals that you might have in talking to the person on the elevator?
Getting to join in.
Getting them to join in.
Yeah.
Getting them to join in. And I think that's going to be the most common tangible goal. And there are a lot of different ways you might want to get them to join in, and we'll tackle that after we go through sort of this basic elevator pitch concept. So if your goal is to get them to join in, what might be another element of your elevator pitch? Yeah, how it relates to them. What's in it for them, maybe? And related to that, I usually ask people like what kinds of things. So what do people like talking about most? It's usually what you're passionate, like what I'm passionate about. I like talking most about what I'm passionate about. The person on the elevator will like talking most about what they're passionate about. But if I can't figure out what they're passionate about or ask them a question or I can't read them, probably the second best thing, talk about what I'm passionate about. So you need to be expressing like these things that you're passionate about in ways that people can relate to. Steve, I'm sure that you could probably answer this question, but what are some, what do you want to be doing when you, actually, I don't even know how to ask the question, but anyhow, so I won't ask it as a question, I'll just tell it. When I took creative writing classes as a kid, the big advice is show, don't tell. Like the more you can create an image for people, the more they're gonna relate. So, so what's in it for them? And then I'm just gonna put here, create an image. So what would be another component that helps you get to the tangible goal of having them join in some way? So just like the category, you're going to do the why, what's in it for them, and
How?
How?
They get involved.
Yeah, how, what next? And that's one thing that people tend to forget a lot of times, and it's a pretty big piece of this. Who wants to take a crack at saying what the what is with mutual aid networks? And we can just start saying little bullet points, and then we'll tease out from that, a couple elegant sentences we can use.
At least working from a standpoint of abundance rather than scarcity is one of the defining things.
Great. Anyone else? What is it?
For me, I get all the alternative currencies and things like that, now that can kind of like link up, kind of.
Mm-hmm.
But for me, if I was to explain it to somebody, I wouldn't go into that.
Yeah, no, I wouldn't either. I wouldn't even say the word currency, frankly. No. I never do. I never do when I talk about time. I can't say I never do. I rarely, especially when I'm talking to new people, I don't say currency. Resource sharing and exchange. It's very clear, I think, but that's great. So steer clear. I'm going to put this on as a general suggestion. I think it's good to steer clear of being a tool head at the beginning. Steer clear of tool focus.
Sorry, I wanted to.
Yes. Did you want to jump in, Georgina?
Why? Yeah, I was just going to say, maybe I'd say it was something like a system of measuring and capturing value of individuals in society.
System of measuring and capturing value and something between individuals. Is that what you said?
Sorry, I've got really, really bad lines. I can't hear you back. Yep.
A word or two. You said system of measuring and capturing value, something, society and individuals.
Yeah. Yeah.
Did you say between society?
Within society.
Within society.
Okay.
Anything else? It's a network, it's a cooperative, it's a network of networks.
So isn't it something around sort of promoting a fairer and more just society?
Yeah, so it's a network.
I'm trying to get away from all this because I'm just thinking if I'm in a lift or I'm talking to my next door neighbour on this council estate, they're not going to understand abundance, measuring and capturing value in society. That's going to go full way.
Yep. So again, tailor to your audience. And the more simple language you use, the more people you're going to resonate with, and the easier it will be to generate some images for people. So a network of networks building a more just society, did you say? A fair and more just society.
That's my impression of it. I could be wrong.
Yep. No. Do you know the mission? Are you familiar with the mission statement for mutual aid networks? It is to create means for everyone to discover and succeed in work they want to do with the support of their community. So a thing that I say a lot of times is redesigning work, making opportunities for us. So I focus on, actually the thing I find most compelling, and it's why I decided to go this direction, so I should put my own thing on here too, is being able to do what we want to do with our time. Do what we want to do and be compensated in ways that meet our needs. So usually that's what I say. Like, we're a new type of cooperative, and we're like networked with other of these networks all around the world. And our goal is to create a situation where we can all do what we want to do with our lives and be earning and sharing in ways that meet our needs. Sometimes I talk about, actually I'm going to put this too, because I'm going to have you select, a few points that you make. Do what we want to do with our lives.
Isn't it about people being able to contribute according to their abilities?
Yes. Gain access to what meets our needs. And contribute, everyone can contribute according to their abilities and their passions.
Yeah.
And I like to focus on the everyone as much as possible, according to their abilities. And do you mind that I'm adding passions since it's your? Oh, okay. I wrecked my bike last week, and I keep forgetting not to kneel on this knee. And passions. And then, what was the other thing? Oh, voluntary wealth redistribution. I like to say voluntary and joyful wealth redistribution. And actually, this is something that does tend to go over well with audiences of people with money. I tend to be in groups of pretty progressive people with money because those are the things that I go to and participate in. But one of the points that I made, just when we were having a conversation like that, I just realized like a lot of people want wealth redistribution. What do we want to have happen? Do we want our government to make us do it? Do we want, like, how do we foresee that happening? So when we're sitting in a group of people who have money who would like wealth redistribution, that kind of, it resonates, because first of all, my government isn't anytime soon going to be doing much to redistribute wealth other than the way they're currently redistributing it, which is. But second, I mean, do you really want that? Do we really want a state to come and tell us how to redistribute our wealth? That happens sometimes.
But there's always been this thing within the capitalist system that states, probably incorrectly, that they create wealth at the top because it all trickles down, and we know fine well that it doesn't. It's just it's a big con.
Yeah, so we're recognizing and building our own
the
wealth.
only way you get some sort of wealth distribution is some people can maybe, with a lot of money, feel a bit probably guilty about having that money. They become philanthropists.
Yes, yeah.
Like just give the whole lot away. So you don't want it, just give it away. People don't have it.
Yep.
Yeah, but philanthropy companies are part of their power, isn't it? Gates Foundation.
Well, so that's the thing, because you've got the wealth, you've got the power as well.
Can people online hear what's being said? I'll just ask everyone to just remember to like try to speak up.
No.
Okay.
Not very easily.
Just now was about a number of things about people's wealth and the imaginary construct that wealth is generated at the top and trickles down, but also that there's a lot of like philanthropists tend to end up exercising a lot of power over what is deemed worthy, what gets permission to happen in society. So a lot of the ways this is building our own wealth, building our own permission, building our own mechanisms for voluntary, joyful redistribution of wealth. So, okay, so do you have a little sense of what you might say for the why and what you might say for the what?
Yeah. I get what you mean about different audiences though. See, I would be, I'm primarily trying to explain it to young people.
Okay, good. So you think about the audience that you would be Each of why don't you just each of you think of the audience you would be most likely to be talking to, and if you and if one doesn't come readily to mind, think of talking to a peer. Think you're talking to someone who's a friend who is similar, who's like-minded with you. And we'll get into tailoring to more different audiences after we go through this. So you start with your easiest one, or whatever would feel easiest to you, because we're just gonna stumble through some of these elements. One thing that I think can be hard is how do you start talking to the person? Does anyone have a suggestion? Kate, I'm sure you do this a lot with time banking. How do you start? You are great at just approaching people about time banking.
Yeah, you are.
How did she start with you, Rachel?
Oh, well, do you know, it was through the university, so Julie and was it Sinead?
Can you think of a sentence that she said?
No, well, they got hooked into it by Kate.
Yeah.
And they came and found me because I tried to do something similar down my own street after we'd been flooded. And it all went wrong, but because people started arguing and stuff, but they knew about that, so they came straight to me and said, "We've found the perfect place for you to go." So Kate didn't really have to pitch it to me.
Great.
I was already converted before I'd kind of met Kate.
So what would you say? Start with hello.
Yeah.
I'm really enjoying a blank.
Hi, have you heard of? Hi, how are you doing?
It's almost.
I'm working on this thing that I'm excited about. Have you heard about mutual aid networks? Could be that. I usually ask people, have you heard about this? I mean, you probably say, do you know? Well, I hear you say, do you know the Time Bank? Are you a member of the Time Bank? Do you know about mutual aid networks? Are you a member of the mutual aid network? Well, we know they're not
I
yet.
would say stuff around. But my big thing at the minute is that we have what we need already. We're all trying to do things in different places, maybe on our own in isolation. And time banking and the bigger picture of mutual aid network, time banking is one bit of the jigsaw of ways of creating these networks of people with I go into mechanisms with a way of connecting you to them. So it's literally enabling you to unlock underused resources within your communities, whether that's in an individual person or space, to enable you to make things happen with less need for money or no need for money.
Great. So what would be the easiest way to add an image into what you just said? You just gave a really lovely little elevator pitch, and I think that it could do with a visual image. So what would be an easy way to add an image into what Kate just said? Because you're saying resources and you can enable you to do things that you want. So what's a good, easy way to add an image?
You'd say something like, imagine a pensioner who's stuck at home. She thinks, she can't contribute anything to the world, but yet she's got a lifetime of skills, and the time bank is one way that she can share her love of baking, for instance, So you go straight in with a case study or something.
An example, yes, exactly. Example is the easiest way to create an image.
I think the image is imagine a world without money.
Sure, and it would just depend on who you're talking to, because some people that means they're just broke.
You could always say
Probably
Without
not.
the need for money.
Right, without the need for money. Yes, that's another image, yes. And you're inviting someone to imagine something. So depending on who you're talking to, if you know that you're talking with someone who's capable of imagining that, and who would view that as a positive thing. I think a lot of people would. That's great. And you also can give examples.
How's that going to happen?
Mm-hmm.
You can also get these into conversation.
Mm-hmm. So, does anyone want to take a shot at doing one? I can do the first one if you want, but I think it's better if someone else does. And this invitation is open to you online as well. Does someone want to take a shot at an elevator pitch that has these elements? And of course it's going to be clumsy. When I do mine, it's going to be totally clumsy also. That's the point of doing this, is we do this together with friends. So when we do it with people we know less well, we have a little practice.
So I have a go.
Great.
All right then. So I'd probably start by saying, what do you like to do? What would you like to do? What are your dreams? And what are your hobbies?
I love to play music. That's what I like to do. You're talking to me.
So what about if we could create a place where you could play music, learn to play music, or teach other people to play music, and then get something back for yourself at the same time as well? So think of something else that you'd like to do, something you've never done before.
I would really like to speak other languages.
So you could perhaps teach somebody to play music, and somebody then could teach you how to speak another language, and it wouldn't cost you anything, and you'd meet lots of new people. Would you like to do that?
Sure.
Right, well, there you go.
Excellent. So what do you want me? Okay, so I'm gonna walk away with you.
That's time banking.
That's time banking, but that's a good start. And
but I've been speaking to young people, and I think that's enough to start with, and then start to broaden things out. You know, like creep out and go a little bit further.
So who has an idea of where you would pick up from there to broaden it into more of this mutual aid network piece that can go a bit farther? That's beautiful, and I really like how you ask me questions about and start with what I love to do, because of course, there you go. Then I'm talking about what I'm passionate about right off the bat. How would you take that farther and broaden it to the mutual aid network thing? How did it broaden to the mutual aid network thing? And why did it broaden? Why? Because we couldn't do everything with just time banking. So what would come next?
So you've tried time banking, but you might, although start with the negative, but there are certain things you can do in time banking and certain things that time banking is not so good for. So with using this mechanism, this mutual aid network, we can go into whole other areas that have the same underlying, the thing behind them as time banking, but go much further. So that something like that.
Yeah, great. And what might be a goal? So you're focused on you can do what you like to do. You can get a skill that you don't have already. You don't have to exchange money. And you're saying you can take it further and build things, build additional support besides time banking to accomplish what?
Living a life where money is the last option rather than it's the first option.
Yeah. To meet your needs, live a life where money is the last option rather than the first option. Cool. So you guys are coming up with really good ideas. So live a life. Anyone online want to share anything? Okay. And as always, just jump in when you want to. Okay. So who wants to start one that's just like begins and ends with mutual aid network and invites them to do something? Someone want to try?
For me, that would just be the elevator pitch, and then I would start. I would need maybe an hour or so with people. It wouldn't be an elevator pitch. It would be an hour or so, just talking about with them the types of issues that young people have living where they're living, and then perhaps for that to happen in a different time bank, in a mutual aid network, for them to talk about the type of issues that they have, and then for the young people to come together and discuss what type of mutual aid network they would like, rather than how I see it, because I don't really know I actually would see that happening.
That's lovely.
Without their input anyway. So.
I'm going to add into your how, sort of inviting into a bigger dialogue, because it sounds like that feels crucial to what you want to do in your context.
Yeah, I just don't feel like I can explain it in an elevator pitch. It's just I learn better through actually. Rather than saying, and every time I try to explain it, I just see people looking at me like, what you on about? And I think, well, actually, I don't really know myself what I'm on about.
Well, let's practice and let's see if we can get some clarity there. So I'll try to do your elevator pitch back to you and take it into mutual aid networks. And I'm going to be totally stumbling through this. So I haven't done it this way.
Okay.
Hi, what do you like to do?
Hi.
What do you really like to do? I said that.
I like to go on cycle rides with my children.
Oh, wonderful. What do you, do you have a skill, or do you have something that you have never done before that you would really like to be able to do?
I don't know that I'd like to do it, but my coat needs fixing, so I wouldn't mind getting some help with that.
Oh, great.
Yeah.
Well, so I'm here to talk to you about mutual aid networks. So I wanted to let you know about mutual aid networks. It's a kind of cooperative that we are starting here in Hull to give everyone a chance to do much more of what you like and less of what you don't like, and actually be able to have your living doing that. And so we use things where we exchange time instead of money. So you could take some other kids on cycle rides, or you could teach some bike safety, and you can earn credit, and you can get access to having someone fix your coat. But also we're using ways that we can pool our money. So when you can't use time to get services from other people in our network, you can tap into money that we're managing together. We've had people use it for paying. Sorry, I always go to health expenses, but that's my content. For paying their healthcare bills, for disaster recovery, just if you need a no-interest loan. This is just a way that we come together as a type of cooperative, and we support each other to live the lives that we want to live. And we're seeing all kinds of great results from it, and I would love to invite you to our next party.
Oh, hi.
This
well.
does have to be
Party. All right, so that, like I said, it was going to be clunky, and it was, and I did talk about a couple mechanical things, which isn't terrible. I had meant to avoid it, but a couple of the mechanics, I mean, I know you guys have been hearing about this, but did it feel like it would be somewhat understandable to a new person?
From that, I would think that there was already a social pull. So by joining the mutual aid network, is that giving Time Bank access to a social pool already then?
I said it as though we already had our mutual aid network up and running. So what I should have said is, when we get this up and running, we will, not only be sharing our time, we'll also, I would probably say something in the comments too. Thanks for being here. I would say we'll not only be exchanging time this way, but we'll also be building more things that we just share. And that includes money. So we can create pools of money that we, each have access to when we need it. So maybe something like that. So I would steer clear still of like the price-based mutual credit, just because it's like, we don't need to go into that yet. That's more complicated. But if we could talk about pooling and exchanging time and services with each other, and money and sharing stuff, it gets at a lot of things where I think, but I'm not sure because I'm immersed in this. So you guys really need to give your accurate, your most honest assessment about if it would come across to people. But I feel like if we hit on the services and the sharing things and the sharing money, it starts to help people see how many more of their needs could be met than in time banking. But do you think that that's true?
I can really see, and more with the savings pools, I always saw how it fitted with the Growers Network. I think what we've got is an opportunity, Friday and Saturday, there's other members of the Growers Network who hopefully will be coming to the events to actually do a specific pitch in that context around what the Growers Network's about. Because also, because what it's about is it is building a network of people and looking at what skills and needs that they've got in relation to growing. And it's also about how we look at our abundance of crops and share those things that go between different sites and all of that. And then and how can we reduce affordable food, not by it being cheap and like waste food from supermarkets and all part of that other problem, but a solution to sustainable food that skills us up and enables us to build resilience within our city and amongst our communities. How can we sort of track what we're all growing and share it? And then, potentially unlocking space. There's, like Lizzie talking yesterday, we've got a market area that's mainly empty to sell that excess food and put that into a savings pool, which in turn can be used to pay public liability insurance on all the sites that are around the city. And then have the commons within that is around us sharing the information about how you unlock land, who you need to talk to, what are the legal things you need to think about, and what it takes for you to actually get that qualified for that insurance for your space in terms of the
I've
group.
simplified all that for like an elevator pitch. You just have to. It's very.
I know.
Yeah.
I wasn't doing that as
Right.
an elevator pitch.
Right.
I'm just saying this is like it's crystallised my thinking how it really does all of those components and equipment, sharing and all of that, all of those things, looking at the tools and everything. It's exactly what the Growers Network needs. So what I'd like to do is bring that down into an elevator pitch.
So, and that was a great little pitch though for your audience that's already been introduced to some of these concepts, because you did just crystallize how it could work. So if you're going to turn that into an elevator pitch, you could be, hi, I want to let you know about this mutual aid network framework. I'm really excited about it because it can really create a situation where we come together and have a do it ourselves way to meet all of our needs for a project that we want to do. We're doing a gardening project. We have land that we got, but we can't pay for the insurance on it. So what we're doing is we're making a savings pool where we pull money and use that to, we pool our savings, or however you want to say it, and use that to pay for the insurance. And at the same time, we're growing food on the land. We're making it in a way that people can share in it. We're making a tool library, so we have all the gardening tools that we need. No one has to own their own tools. And it's an example of how mutual aid networks give us the opportunity to take a lot of different kind of resources and put them together in a way that we share them and really create the world that we want. Something like that. Yeah. I'd like you to invite you to our next party. Or something. I mean, that was like another clumsy thing, but I'm just attempting to take some of what you said and distill it down into a little bit of like plain language that can go kind of quickly.
But actually using the Growers Network, I mean, we need to get the people in the Growers Network to say, that makes sense. Before you can start using it as a case study, even though that was what was in the original pitch, but it's still about getting that ownership. But then using that example to go, so how could you see this working in your situation, with your project?
Excellent question. Yeah. And you can give an example. I mean, you could give a theoretical example of it, you'd not name the Growers Network, but here's a way that we've thought to apply it. Yeah. Here's a way that we've thought of, and let people know these are all just starting. I give the example of Allied Co-op a lot because I think it's a really good example of how you use time banking and generate other kinds of wealth. So here's that example. And this is really like the birth of the idea of mutual aid networks. I mean, for real, this was a proposal that we did on a project that we started until all the food supply for the whole neighborhood went away, and then we just stopped that project and started focusing on food. But anyhow, in a neighborhood that's a really cut off and really low income neighborhood in Madison, we started a project where where our energy company taught local residents how to do energy efficiency consultations. And then they would go door to door and invite everyone in the neighborhood to join this Allied Community Co-op, which was the group that was doing this, and invite them to join a time bank, which is where you offer your own time and talents in exchange for credits where you can access other people's time and talents. So I'd probably elaborate on that a little bit more. But and they would go and offer them the opportunity to join the co-op and the time bank, but then also offer them an energy consultation. Then once people accepted that and started saving energy, they would put part of their energy savings into a savings pool that the neighborhood managed. And the neighborhood decided that they would use that money to get a van that they could take people on food shopping outings with, and they could take young people on outings once a month. So it's an example of how we took the real wealth of the neighborhood, which is the people there and their willingness to help each other out, and then grew some money from that.
I think, it's great. What you're teaching us really is kind of sales skills, the sort of, but there's an element in this communication which is that we live, we obviously live in a media society, and I just kind of wonder what your take on the kind of the media relations is. What do you do in Madison with? How do you work with newspapers, with radio, with TV? Because the example you've just given about the free energy consultations, that would be a great sell to, in the form of a press release to local media.
Yeah.
And it would bring people into the idea of, the wider idea of mutual aid networks. It's just a little chunk of what you do, but
yes,
it's that kind of, so you sort of, I suppose this is where the kind of the sales pitch kind of crosses over with like having some kind of media strategy, which I hate to say because
it's essential.
Yeah.
It's essential.
Yeah.
Exactly. Yeah. So that's another component of this. I want to make sure people leave the session feeling like they can verbally express it. Right. But you're right. And so we do a lot of work with media and number one, just work on developing and maintaining relationships with people in the media and reaching out to them when we can. And I'm really shameless about exploiting other opportunities. Like, for example, my coffee house got wrecked a couple nights before our summit started. A couple weeks ago, seriously, a car drove all the way into the coffee house and wrecked it. So we use that as an opportunity to have the TV come and cover our summit and let people know that we crowdfunded. We started a crowdfunding campaign that raised $15,000 in 3 days to hold us until our insurance kicks in, which we desperately needed. We couldn't have paid payroll or anything. So that was a huge relief. And now that that is done, once our insurance pays us back, we are going to seed our neighborhood savings pool with the remainder of that money, and it'll become a recovery fund that's shared, that's cooperative. So we're going to turn like the support of the community and our misfortune plus our good fortune in having the support of the community to pay that forward to people who might not have had the opportunity to build 21 years of visibility because they have a storefront space. We do some press releases. We do attempt to use quotes and images and examples whenever we can. And we haven't gotten that much coverage for mutual aid network. Well, we've gotten a decent amount of coverage for mutual aid networks compared, for the point that we're at. But so as a journalist, do you want to share some tips about what are good ways to deal with media?
Well, it obviously depends who you're writing for and the audience. If you write for local news, it would be something like that. You pick on something that's a local need that journalists will be able to relate to. Because I'm trying to think of an example, but I've done some PR for Time Bank and sort of.
I think for me it's about hooking it onto something. So you're doing the journalist, you're doing the radio show, whatever, a favour. Yeah. Like for example, Giving Tuesday is a great opportunity.
Because that was off the back of Black Friday, wasn't it? Or Black Monday, whatever it is.
Yeah.
The thing where
Black Friday.
So the idea is already out there.
What?
You just go get inherited from you.
It's not you personally. I always thought Black Friday referred to like black as in the darkest times. I didn't realize until a couple of years ago that it's about like going in the black for your balance sheet. Sorry, go ahead.
Yeah, so there's being aware of kind of what ideas are out there circulating in people's minds and trying to capitalize on that. And just kind of knowing the journalists and knowing what their interests are, and a lot of them don't like sort of right on kind of liberal stuff. They don't. They want something that they can chat about, and they can make some little cheeky jokes about or whatever, depending on who you're dealing with. So you have to try to rein in the sort of the worthiness of it sometimes. That's the thing.
That's good. And that might be true of your individual audiences too.
In local, yeah, I'm talking about local media. I mean, it'd be different if you're writing for New Internationalist or something like that. You know,
But don't assume everyone shares the values that you are like being explicit about.
Yeah.
Like we just had a big article in the Stir magazine.
Right.
Do you know that one? It's very nice, and I was really grateful because someone I had just met had just read it, and he said. So he told me he read the article, and I asked him what he thought of it, and he said, "I really liked it because you just said the different things that you do to make it happen, but you didn't go off about why and like your whole, I don't know, he didn't say it like this, like airy-fairy kind of thing. You let me have my own impressions and put my own values into it, and I appreciated his saying that. And I think, I have found mutual aid networks to be an extremely easy sell because it is about everyone doing what they want to do. Everyone wants to do what they want to do. And especially with young people, because young people really don't see many avenues toward having security and jobs and stuff. So, and actually I didn't write this down, but sometimes I say like, let's replace jobs with good work. Why get a job when you can do good work? And good work can be playing your music and taking care of people and beautifying your neighborhood and growing gardens and using your professional skills in the balance that you would like to have with those. So just some basic things like that. So I guess you can confirm or deny this. To me, it seems like a press release in more words with more details still probably encompasses these same elements. And that you absolutely have to remember the why you're talking to them and what.
Yeah, but you'd start with a news line. That's the difference. In a press release, it would be a specific thing that makes it like why a journalist wants to report this now.
Yeah.
You know, that's the difference.
So you want sort of the urgency of like getting them to write about it, like why? Yeah. So can you think of an example,
well, I don't know. The thing that what was the Giving Tuesday was the antidote to Black Monday or whatever, wasn't it?
Yeah, because people have been like knocking people over the TVs and things like that.
Yeah.
So
they didn't even need.
So we're encouraging people to come forward and sign up to say what they're going to give.
We had a gift card as well. Gift. Give your time.
Yeah.
Ditch the shopping and give your time. Yeah. Which you have gift cards. Yeah. This whole thing around, this is something we've been talking about, the way things are funded, the way we tend to think in silos, and the time we have to spend around identifying need for things, which tends to be focused on particular groups. I think that is my hurdle that I'm having to overcome when you live in that world where you're justifying yourself around hard to reach or in need and all of that, to describing it in a way that this is for everybody, even though that's what we're doing. And I think on a personal level, I think that's been my challenge, which you're constantly having to communicate, and that hoop you jump through around need. And it's like, this is what we all need as human beings.
I think what's interesting.
This is Helen.
Yep.
Hi. Yesterday I saw the little clip that Linda did about, opening all the doors. And today, as Kate was talking, because I see no visual, what she said was, she talked about unlocking, the keys to unlock. And so a nice little visual that, because I use the STAR theory a lot, because in Kansas our state motto is to the stars through difficulty, which is Latin ad astra per astra. So, and then with the fun, the Michelangelo body for health, as I dress up as the tooth fairy, I talk about the STAR theory of radiant health. So everybody has these health concerns. Everybody is a star. Everybody has skills and talents and attitudes and resources that shine brighter when they get to serve. So what if we could get some kids or people to do some really fun things about the stars, you know, and connecting our light and connecting the dots between our stars and the Starship Enterprise, you know, so for Halloween, does England celebrate Halloween?
No.
Yeah,
It does now.
Differently.
Yeah, we got that.
More low key
Yeah, we got that from America.
for sure.
Was that a yes or a no?
It's a not.
Not really.
Not really. It's way more low key.
It's a big thing for kids.
Okay, well, does everybody know that movie Back to the Future
Yeah.
with Michael Fox?
Yeah.
Okay, so this Halloween, I'm hosting an event called Back to the Future, Healthy Relationships, Healthy Communities. And it will be with all, you know, playing on all the fun things. And in Halloween, people dress up as all kinds of characters. So we always get people that dress up as the Wizard of Oz. So I'm playing on all the Kansas things. And using that movie Back to the Future, because there's a very fun movement called steampunk that's been around since 2010 at least, where so we're going to punk it all up and do all kinds of fun steampunk things, and I thought that might be big in UK. And it would be really fun if you want to join in with our Halloween Back to the Future theme and do a similar thing like the summit, where we can be really playful with each other and go with the flow and have some very creative ways that we put new things together. So if that would help us to catapult, which catapult is kind of a steampunk kind of thing, make some fun videos that teach people about our mutual aid network and how we combine things together in new ways and get things out of our skill closet, or however, it would be really fun if Hull UK and any other time banks wanted to host a party that they linked in with us visually aboard the Green Space Starship.
Cool.
So I made a little flyer, and I will I'm trying to figure out how to make it in. It didn't.
So
Didn't
I
come
can
real.
stop you there because we need to get into practicing some more elevator pitches in our last 15 minutes, but
Yes.
you can share
I
your
had a really tall building once again. Sorry, I hate skyscrapers, and I know.
No, but we can,
All right.
we can share your invitation with the people here via email. We've gotten everyone's contact information, so thank you.
Perfect. Thank you.
You are doing the same thing that we've been identifying the need for over and over, which is creating fun opportunities and fun events. And never have a meeting when you can have a party instead.
Exactly.
So
And the opportunity is to teach people how to have fun without alcohol and drugs, because that gets so many people into poverty and incarceration and sucks their family down. So that's why I say Wellness Weavers, the women, are safe based.
All right. So who else wants to try an elevator pitch? Do you want to try again with one that's about the whole thing? Or would someone else like to try a little mutual aid network elevator pitch? Or does anyone feel... Well, another example might, if you are feeling stumped, another example might help break that open. And then I'll give you a chance to say if you're feeling stumped about something. Want to try it? Anyone online?
If I was doing it
You're talking to me, Stephanie?
Oh,
as
no,
the
I was
challenge.
asking Rachel if she wanted to try another.
Oh, okay, very good. I can't see you guys. I liked when I could see you.
Oh, okay. Go ahead.
Yeah, if I was maybe speaking to an organisation, I can think of more ways that an organisation would benefit from this, especially an organisation that's serving communities.
Okay, I am that. So go ahead. Hi.
Hi. Okay, so I'm not sure that I actually have a pitch to make this up as I go along. Yeah.
Yeah.
Okay, so imagining that you're already part of the time bank. Do
Okay.
you understand that?
Great.
Okay. So, so you're already part of the Time Bank, and you've seen how the different exchanges can take place within people and within organisations, and from people to organisations. How has that benefited you? Do you feel like you've got quite a lot from that? Do you think that there's ways to improve it?
It has been a benefit, but I would definitely, we don't use it as much as we could. Sometimes it just takes a lot of work to find the right match, and so we just go back to the way we usually do things.
Well, I'd like you to start maybe coming to along some meetings, but maybe you set up those meetings, because we have had meetings before. It's difficult to get everybody together, and I understand that. But this is becoming quite a worldwide thing, and other countries are already using it. So if you could maybe start just tapping into us, telling us how it could work for you, that would be a lot better, because that's the meaning of Time Bank, you telling us and us facilitating it. So would you like to maybe give me a list of dates of when you'd be available? And then I can maybe speak to some other organisations and find out a list of dates when they're available, and we'll find something that's suitable for us all, because I want to talk to you about other places in the world that are already doing this, and we can then now connect to them, and we can learn about how they do it, and we can maybe find out how we can take bits from them to make it work for us, and we can maybe something like that.
Okay.
Does that sound good?
Yes, I'll give you
that. It's a bit of a long elevator.
It was busy.
Did they mention the Mutual Aid Network?
No, I didn't.
Yep.
But then I would do at the meeting.
Yep. Okay. Anyone else want to do one that's Mutual Aid Network? Do you want to try to make yours into an elevator pitch that you did before?
Okay, so we're in Hull. So when oh God, it's really hard, isn't it, when you just put on, I'm really bad when I'm just put on.
I know,
put
sorry.
on the spot. Yeah, like, you know. Well, I always start saying, when I discovered the idea of time banking, I thought it could make an amazing difference to people who have everything put in their way to enable them to do the things that they want to do, to actually use skills, learn new things, connect to people to enable them to get experience or whatever, whether it's for work or whatever. We have lots of organisations that, I know this is an elevator pitch, we're all working in isolation, competing against each other, and each of them have got their own strengths. And time banking does help in some ways, but it doesn't go far enough, and we need other ways to enable us to exchange like stuff. So we can, you know, it's skills. It's like looking at how between organisations we can share using different ways of exchange. This is rubbish.
You're fine. Keep going. Keep going. You're fine.
Why say one sentence when you can say 3 pages?
No, you're doing fine. This is the point of stumbling through it among friends. And that was a great way to start. And you're starting from
our experience.
Yeah, from your experience and maybe the experience of the person you're talking to.
Yeah.
So then what? So you said we need ways to exchange stuff. So
ways to exchange stuff. And what we do when we build those networks is we quite naturally, when we know each other, we start sharing things. But when you need something that's outside that, it's a way, how do we find that need?
Mm-hmm.
So this is about linking up all of these different ways that we collaborate when we get to know each other, and building a huge network of collaboration to enable us to do the things that we need to. And we're living in a world where more and more people have less and less money. We need a solution that is joined up, that is an alternative to that enables us to live healthy lives, that enable us to not only do the work that brings the money in, but actually be a part of our communities as well.
And how does this lead to exchanging stuff? And sharing stuff. So there was a lot of really good why in that. There wasn't very much what.
Oh, right. Okay.
So including the name of what you're trying to pitch.
Oh, yes, I did.
So how about something like, when I started time banking, I thought it was the key. Yeah. And it's really excellent at linking people with other people and linking their resources and building people's skills without having to use money. And it also doesn't go far enough because we also need stuff. Everybody needs stuff. And there are things that we still need money for. So now we are building something more called mutual aid networks. And it's a type of cooperative where we use time banking, but we also share stuff, including money. So we develop savings pools where we pool our money and make it available to each other. So first you turn to what could be shared. Second, you turn to exchanging with each other in skills and goods. And if you really need money, you can tap into a pool of money that we're managing together. So your own money can be a last resort. You can have a lot more security with a lot less of your own money. That could free you up to do less of what you're doing for money all the time and do more of the things that you really enjoy, like working, like beautifying your community, or things like helping out your neighbor when they're ill, or pursuing your art or music. Just something like that. I'd like to invite you to our next party. Did that feel like an elevator pitch based on where you were starting? Somewhat? Yeah. Does anybody have thoughts or want to try something, or even just throw out an image or a critique, just like of this framework, or like a place, or just like disconnect?
I think this is just a thought. In terms of how you pitch it, I would choose to be careful about my own, saying what my own political views are. Mm-hmm. I've got quite strong political views that not everybody agrees with. Mm-hmm. So I think depending on who I was addressing, I would pitch it at different levels. So if it is perhaps someone who I knew had maybe not perhaps didn't lean so far left as I do, mm-hmm. I would perhaps just talk about the benefits for all. Yes. Kind of thing. Whereas if it was somebody that I knew we were coming from the same direction politically, I'd perhaps talk about it in more depth and how it was like a change in consciousness and that kind of thing.
Here's something that I think can, just from that, that can resonate with people on the right and on the left, is rely on each other more than we rely on the state. That appeals to right-wing people, less reliance on the state. It appeals to a lot of humans who don't trust the state. What were your thoughts? Does that trouble you?
Well, on the response that if you go back to sort of the 19th, early 20th century, there's all this big emphasis on smiley self-help thing.
Right. Yes.
It was to the right, but it was about people, helping themselves.
Yes.
Whether they had the actual resources, capacity to do so. It was an excuse for abandoning the poor.
Yes.
What they saw as the work shy, etc., etc.
Yes. So I doubt that you can hear that online, but she was just talking about all the ways that these kind of messages are used to abandon people in need and for the state to excuse itself from supporting people. Isn't it called Big Society or Great? Yeah. And that's always, yes. Yeah. And we are aiming to really create the security that can help alleviate that. And it has to be serious and it has to be real, and we have to make it actually available to everyone. So besides this, I think we'll leave off the elevator pitches within a minute. I want to give you a chance to ask questions. Oh, okay.
Yeah. Okay, so see how the mutual social exchanges we have going on between each other, what about if we could extend them to people around the world and have a mutual aid, a global mutual exchange, and we call it mutual aid network.
Lovely, great. So I think there are a couple key things. We're sharing knowledge and experience so we can support each other doing better in these things, and we're sharing stuff. So we could have that global network all sharing our projects and really learning from each other, but that global network, we can share stuff back and forth. We could exchange frequent flyer miles. We can give people housing when they're traveling. We can write, proposals or articles or do graphic design for each other across distance when we need it. So that's another example of how a mutual aid network structure can meet tangible, visible needs.
So I think organisations have probably benefit quite a lot from also.
So I think it's interesting what Kate was saying earlier on about the networks and the, I don't know whether you were referring to like voluntary communities. in that
Yeah,
in terms
yeah.
of the organisations, because I think one of the biggest problems for those two sectors is that over the years they've actually had to compete against each other for funding, etc. When the very nature of the basic values is about cooperation and benefiting the members, and yet they're constantly fighting for small pots of money to keep themselves going, particularly in the voluntary sector, because they've got paid staff, of course, so they're constantly having to fight for these pots of money and justify their existence in order to get that money.
Exactly.
Yeah, and that's not how it should be.
Yeah.
So you have so when you give the descriptions of the problem, it's really great, and you can take that thought and, like when you said imagine what during your first elevator pitch, you could take what you are thinking of as like a key problem. You could say imagine a situation where organizations aren't fighting with each other for crumbs, but they're coming together to make a pie by exchanging with each other and really sharing resources. And I've found a structure that can help make that happen. It's called mutual aid networks. We're a type of cooperative designed to, and could go off from there. So again, you're starting with what you care about, like how you perceive the problem, but imagine the solution. Give people an image of what the world might look like, looking a bit better to them. And then, yeah, it's lovely. So there was something that arose from, all right, so it's 12:59. We're going to end within 3 minutes. There was something that arose from what you were saying about the political crap about, abandoning people. And I just want to throw out there the very essential piece that is a really important piece of our strategy with making mutual aid networks. One of the reasons we want to be in a lot of different places, including different countries, is to really build the relationships and build the levels of understanding of the potential of this that can help us create a constituency that is politically powerful, where we can, there are different national governments that will do things to put barriers in the way. For example, Finland tried to make time banking taxable a couple of years ago. We are creating a situation where we can support each other internationally. For those who were here in the last few days and also in the Madison Summit, we've learned, including from Finland, there are a number of situations where regulators come and try to stomp on what's happening, including in New Zealand, and people fight back and win. And actually every situation so far that I know of where challenges have been thrown out by regulators, we loosely about people in these kinds of efforts have won. And a lot of times it's because they see that you have a constituency, you're doing something that's benefiting people, you're doing something where if they come and squash it, they're going to look bad. And so we need to not only be making the relationships, the constituencies, stay rooted in the values, know that we don't intend to compromise on those values, but we also need to be really demonstrating that we do communicate with the outside world. We do it regularly. We talk to the media, and we will talk really loudly if they come and try to destroy what we're doing, because we can demonstrate the benefit that it's been having for people. So that's an explicit piece of the strategy of making mutual aid networks and networking us together. An explicit piece of the strategy is we have done everything we've known how to design it in a way that it can grow fractally and grow very quickly. So every pilot site agrees to support other pilot site success, help other pilot sites get started. And part of that is the recognition that the very few people who really benefit from the fact that they've decided to own all the resources and maintain that ownership through force, they don't like things like this and they try to shut them down. And so that's one reason we are really operating within their rules, actually, of taxation and everything. We're not trying to fly under any radars, but also growing really quickly. So by the time they see us as something that they need to worry about, we have enough strength to snarl back like all these other efforts and make sure that we can keep going and make this happen. So those are big pieces of what we're aiming for in mutual aid networks. And I appreciate that we're here on our second continent to work on this. And what I want to suggest for taking this forward, so it's going to just take me a little while to get all these notes posted and be emailing all of you. I still have to do all that data entry, and as you know, we've been having long days, so it's hard to get to. But once we post all these notes, I did make that Google Doc, so I want you guys to start putting your notes in there. I was thinking maybe we should just write up a few sample elevator pitches, and we'll have those available for people so you can practice with what other people's examples are, and then you can start tailoring to your own needs. It seems like it might be a way to start to carry this forward, because an hour and a half or whatever we had isn't long enough to really.
Any tips on promoting a particular event or something? I can possibly look over a press release with people.
Thank you. If you didn't hear that, Stephen just offered to give tips and suggestions when we're looking to promote particular events. Cool.
I just wonder, you are a Time Bank member as well, aren't you?
Yeah.
Wonderful. Thanks. Anyone want to share a parting word or two? So we're not going to have everyone speak just because we need to be wrapping up, but anyone has any?
It's, as you say, it's an hour, and I feel really motivated to sort of sit down and to actually really start us having that common understanding and language about how we talk to people about this, because it's not just within the sort of group of people who have been coming along to the sessions here. There are early ones, but then it's like wider, so we're all sort of singing from the same hymn sheet.
Yes. One thing I would really like to encourage, and I want to start building this up in every pilot site, and I need to start doing it in our own, is to have gatherings where we do workshops on this. We can share sort of a general format, and I can share some exercises. And people hate doing this, but it's so effective. I think it's really healthy and important to pair up and role play and do your elevator pitches to each other. So I'm going to really recommend that people do that. Not everyone has to. And what I would have done if we had to have more time, actually people really like this exercise where you like stick a label on people's forehead. So I'd go put a piece of paper on your forehead that you couldn't see. And it might say funder, it might say young person, or potential funder, potential member, isolated, elderly, whatever. And then the person would have to pitch to you in a way that's tailored to you, and you would guess what role you're in. So you kind of get a sense of how effective you are at like really responding to the individual person. But it's a really effective exercise, and people really enjoy having something stuck on their forehead usually. Seriously, like it's pretty fun. Anyone online want to share a parting word briefly? Okay, well, I'm just going to say goodbye. And
I just want to say thank you all. I have to run off to the dentist, and that is an hour commute one way, plus being there in the Little Apple, Manhattan, Kansas. So I'm not sure when I can check in again, but thank you so much for the energy of putting all this together and making it available online.
Thank you. Thanks for joining us. And Zoe, I just wanted to say hello to you since we hadn't seen you on here before. If you want to just say hi and bye, tell us where you are, that'd be great. You need to unmute your mic from your end. All right, so we won't hear from Zoe, but thank you for having joined us, and we're going to go eat lunch now, and I hope you all have a great day, evening, morning, wherever you are. Thanks, bye.